Hi there, I'm Mark Sebastian, the founder of OptionPit.com, and this is the AM Volatility Report. Hey, reminder, we've got this big event coming up on the 30th. You can learn everything you want to learn about options on gold, oil, and other commodities. We're going to have all sorts of cool things. In addition, we're doing a webinar on Thursday on commodity option trading. Should be a blast. Be on the lookout for an email from me regarding that. If you haven't already gotten one, I did put a registration link in two places. On Friday's blog around the trade idea of the week, you can find the link right there to register. So if you go to optionpit.com/blogs, you can register at my beautiful webinar in 3 days and 10 hours. All right, so let's talk about the market. Well, we're back from the weekend, and you can see the market is flat. Vol, while up, is actually down, because remember, we're coming off a long weekend. So we expect VIX to be up about 0.6 to 0.7%. Instead, we're getting a VIX that is mostly flat, typically a sign that vol is down, and really, we had a shot at something bad happening around that Turkey coup, which now has turned out to maybe not be a coup. And with that, it's as shocking as it is, we're just flat, despite all that. After, it looked like things could have been interesting when we came in if that had been a legitimate coup. Well, it's not. All right, so let's talk about the market today then, and where VIX is. You can see VIX 1288, and they're giving us opportunities to hedge. I think volatility has gotten pretty cheap, and if I set up some trades, look at the 1721 call 1x2, and you end up with a trade that costs nothing. All right, theoretically, it is nothing, and that's up August. That's not that far out of the money. That's a cheap, inexpensive hedge. Moving on to things that are moving, TLT, bonds continue to move. Gold continues to move a little bit. I think both are assets that are going to continue to see some downside pressure, that had a bit of a short squeeze. And if you look, I think that you're going to see a little more pressure on the utilities as well. I think those are going to be some opportunities to trade volatility from the long side, most notably TLT. I think TLT premiums are too cheap, despite the big move in volatility. If you look at implied versus realized, it's pretty clear that realized is way outpacing and climbing. All right, it is absolutely, movement is increasing, not decreasing. That sets up some opportunities for some trades. We've got a lot of earnings this week. You can see we got Goldman, IBM, Microsoft, Netflix, some of the airlines, Bank of America. So we're kind of hitting the sweet spot of earnings. It's going to be really interesting to see how some of that shakes out. And as you can see, watching some of these European banks, they've recovered a little bit. So it looks like, as bad as Brexit was, ends up not being that big of a deal. And British pound as well. So Brexit off the table. So now the question is, do we grow so much? Is the economy good enough that the Fed brings rate hikes back on the table? And I think that's probably what's going to come next out of the next Fed meeting, and that is where I would be setting up my hedges to trade. Finally, SPX, after moving wickedly the last, take a look at this. Up, 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 and completely stopped moving. Maybe some interesting front spready or straddly type trades that are forming there. in conjunction with a VIX trade. All right, folks. If you have questions, email me, mark@optionpit.com. Read our blog, optionpit.com/blogs, and or call us 888-TRADE-01. Have a good one.